Hello everyone and Happy New Year. We're back once again for a brand new season of House the Shared Living podcast, and it's season 6. We will be with you for the next few months to bring you the latest news, views and insights from the rented shared living sectors. So if you work in and around the PBSA, BTR, co-living, university accommodation, HMO and rented later living sectors, you've certainly come to the right place. I'm Sarah Canning from the Property Marketing Strategists.
I'm Dan Smith from Resi Consultancy and Verberflow AI.
And I'm Deenie Lee from the Property Marketing Strategists.
Let's hear from our headline sponsor, My Student Halls.
Housed is sponsored by Spotlight Boost on mystudenthalls.com. Use Spotlight Boost to stand out in search results and drive more leads to your properties.
We are incredibly delighted that Dan and the team from My Student Halls have decided to be our headline sponsors once again. They're such a key part of the student accommodation marketing cycle and have always been great partners to us at House. So thank you once again for supporting us. And a huge thank you as well to Wash Station and Utopia for coming back and sponsoring House once again. And excitingly, we would love to welcome our brand new sponsor, Howden, who are joining us as a sponsor of season 6. More from them later. Hopefully you've all managed to have a restful festive period, but we can also see that you've been listening to our special episodes from December. So thank you all for your listens. And if you haven't yet, they were great episodes, so please catch up on them. So Deenie, Dan, what have you been up to the past few weeks? I was thinking this is probably the longest we haven't spoken to each other for about a year, really. And Dan, you're in India at the moment. What are you up to? And did you get there for New Year?
I got there on just after New Year's Day, so I flew out from Heathrow on New Year's Day. I had a really lovely festive break, Bodhi's first Christmas, and just really lovely to spend some good quality time with family and friends. Then I was drafted in to go to Delhi and Mumbai with the Verberflow team. So we had a bit of an offsite and a strategy session, but it's really, I just think, really important to come out and see the office, see how the team collaborate. And I think that's one of the things that we really need to make sure that we're focusing on, that collaboration with our office teams. So I'm just here seeing exactly how they're getting on, setting a strategy for this year. Obviously, we're expanding into new markets and things. And yeah, I think you all know that I absolutely love India. I have a real love affair with the country. And so, yeah, I've thoroughly enjoyed the last week or so or 5 days or so that I've been here. But if you're watching this in some way, shape or form, I look absolutely terrible. I'm desperately trying to stay up for my red-eye flight so that I can actually sleep through it. So, yeah. But no, really, really nice time. What about you, Deenie?
I had a total switch off from work, really. So I had a nice end to the year, really, and took a proper break, spent time with family and friends. My daughter has officially run off with the circus, so I spent a lot of time at circus where she was performing at Wiki Hull. But all good, yeah, and ready to get back to it, I think, now. We're all seeking out the routine, I think.
Yes, absolutely. So this week we're going to be taking a look back over 2025. We remembered that we had done a predictions episode at the beginning of 2025. So it was Deenie's bright idea to look back and see whether we were right or not about those predictions. So strap in and see what we were right and what we were wrong about. And then next week, we're going to be looking forward to 2026 and kind of creating more of those predictions. So the first thing that we predicted at the beginning of 2025 was about the Renters' Rights Bill. We said it could be a major change to renting and more competition across PBSA, BTR, co-living and HMOs. We were right about the ambiguity, the timeline slippage, and that competition would intensify, but we were wrong about timing. But I think everybody was wrong about timing as well, because we expected it to hit in 2025. We thought that there would be implementation chaos, but in practice, the Royal Assent landed late October and the rollout is going to be in this year. So yeah, what's your reflections on that, really? Could we have called it any differently, really?
I don't think so, really. I think it still rings true that it's clear as mud. I know that's what we said. Yes, PBSA has exemptions, but we don't know what that overall impact is going to be on the entire sector. from an HMO space. There's a lot of talk of these June to June tenancies to mitigate any revenue loss by bringing that tenancy start date forward, because obviously with 60 days notice, students can potentially cancel in April and leave by June. And if it's a September to September contract, that's going to cost them 3 months worth of revenue. So yeah, expecting to see more June to June tenancies, but what that actually does, who knows? I think students are going to start looking for more flexibility overall, but it wasn't really sort of chaos ultimately. I think that is definitely going to come next year, and I think it's going to be fascinating as to what happens with regards to when HMOs really go to market and what that looks like if we have queues around the block, and whether those tenancy lengths shift, whether students have more flexibility. So, the HMO market is going to be definitely affected in some way, shape or form. We are overall expected to see some more attrition. PBSA is obviously exempt, but we're expecting that, maybe students will want more flexibility if they're being offered that in HMOs. And of course, BTR and co-living can offer that opportunity and flexibility as well, but they are beholden to the Renters' Rights Act. So overall, it's going to be quite a lot of upheaval, I think, over the course of this year and next, as, it was sort of more preparation this year in 2025. And yeah, 2026, everyone is really sort of quietly adjusting that product and their sort of tenancy assumptions and those operational models. So watch this space, but I think we were pretty good. Lots of ambiguity. We knew that. I mean, it's quite an easy prediction to get right, but I knew that we weren't going to see, any exact results just yet.
Yeah, agree that we were completely wrong that it'd be one of the biggest shake-ups for the sector, because it didn't happen this year. So because of the timing, it didn't shake it up. But that's obviously going to massively hit this year. Though, even though we've had that year's warning and we had that grace period of a little bit later, whilst people are doing their due diligence, are looking at it, it still feels like people aren't that well advanced. Even though we know it's coming, we've got a bit clearer around timelines, but it doesn't feel that we've really grabbed it by the horns and we know exactly what we're doing. So, but I'll save the rest of that till next week.
Yeah, a prediction for 2026. I mean, I think it's not going to impact really the students who are already renting this academic year, which is probably why we haven't seen that impact. But obviously people are advertising rooms and flats and houses now for people to move in September. So those changes do need to be made. I mean, we talk to students all the time and they still know nothing about it. Still not seeing loads of stuff out there about it, lots of support, lots of content about it. So yeah, as Deenie said, let's save that one probably for a prediction for 2026. But I think we were as right as we could have been with the information that we had at the beginning of 2025. We're just going to hear from one of our sponsors, Utopia.
Utopia is the trusted partner for high-performance asset management, cutting energy costs, reducing risk, and delivering proven ESG results.
With billions of data points and 75,000 rooms monitored, Utopia turns real-time intelligence into measurable value, protecting investments and driving continuous improvement.
Choose intelligence that delivers. Choose Utopia. Thank you to Utopia for being such valued partners of Housed, and we wish you an even more successful 2026. Right, on to our next prediction. Well, we were talking about Angela Rayner's pledge to build 1.5 million homes. I mean, that dates it anyway, doesn't it, really? I don't think we'd have predicted. No, we couldn't have predicted that Angela Rayner wouldn't be at the helm, and for the reasons why. I don't think anyone could have seen that coming. But we discussed basically that how much could be delivered in the first year and whether building new homes would meaningfully affect affordability. Dan, I seem to remember that you were talking about planners and, that the 300 planners is a drop in the ocean, to quote Dan Smith. Planning reform and construction capacity constraints make 2025 delivery unlikely. And I think we were pretty much bang on, really. But the first year ramp up was just not there. And I don't think, and yeah, we didn't expect it to be, how much more has come through, planning, how much impact those additional planners have had to the market. But one of the clearest signals was net additional dwellings in England was actually down from the year before. So actually, we still need clarity on what homes are included in the numbers. We've discussed over the last year that later living and PBSA are excluded from those housing numbers. How much impact would have been made on those numbers if they were included? So certainly a bit of ambiguity about what counts as an additional dwelling or a home, but certainly that first year we haven't seen that ramp up that we should have, although we, as a podcast, we didn't expect there to be.
We also talked a lot about kind of planning reform and the need for planning reform and how we didn't expect that to happen quickly, and thinking that it's been 12 months on and I'm still no clearer on what the planning reform is or how that's going to impact that house building, which is quite depressing, really, that actually we so desperately need this. Everyone seems agreed that this is what we all need in this country, but yet we haven't made any progress on any of it. And as you say, Sarah, the house building numbers, they've now got more to build this year and the following years to achieve their target.
On the housing delivery, I just don't think this surprised anyone. You don't fix a structural undersupply problem overnight. So 2025 definitely proved that. But dropping 300 planners in there, that is, as I said, a complete drop in the ocean. And we have seen that have zero impact. So there's been no clearing of the bottlenecks. It is, everybody is still stuck at certain gateways. I know that's, talking about BTR and PBSA in particular, it seems to be maybe easing slightly for some, but overall it's what are they going to do? Are they going to actually get to the point where they realise that they have to fold those BTR and PBSA numbers in some way, shape, or later living or co-living into those numbers in some way, shape or form? Yeah, absolutely, because at the moment they're going to be between 40 and 50% shy of their target at the end of Parliament, which means that everyone in that housing department that's declared it needs to resign. So yeah, we're still no further along. There's still no root and branch review of the planning system, which is what there needs to be. And I think that's something that we've got to start to see very quickly. For the government to have pinned, a lot of their mandate or, the sort of their manifesto on these 1.5 million homes, where are they? Where are they going to come from? Well, we're not seeing any updates. Steve Reed, the housing minister, hasn't given any sort of further updates and isn't charting progress. And what we really need to see is a bar chart of progress as to where that's up to and what we're going to do to fix the planning capacity, the skills, those, materials, delivery confidence. Nothing has happened at scale at all. And that's what needs to happen. This isn't just, let's do a few quick wins here and there. This is a root and branch review that's needed if you're going to deliver 1.5 million homes. So, 2025 did highlight that those specialist sectors like PBSA and like later living is still not properly understood in the wider housing conversation. And I think that's, until that changes, we're still going to see those misleading debates about how many homes are actually being delivered in the first place. But, we're not going to see the government make a huge amount of progress in terms of hitting those target numbers anyway. So, yeah, I wish them the best of luck, but I can't see any major movement at the moment. And there's nothing, it doesn't seem like there's anything in the pipeline with regards to root and branch planning reform and really clearing the way for more development and, more homes that people need from an affordability perspective, but also just in the locations that they're needed.
I think towards the end of the year of 2025, I think we did see some isolated examples of planners kind of overturning objections and granting planning permission. And I know that there was also, a kind of, I guess, a sweeping review about the homes that are being proposed near stations should be approved, without debate, really. So I think it's coming. Well, it has to, absolutely has to. But like we just said, with a kind of, down, numbers being down for 2025, it means that 2026 has to deliver something quite exceptional, and moving forward to get there. So, yeah, I think, again, we'd have liked the result to be different, but I think we called it pretty bang on that it wasn't going to have the desired impact that it should. Right, let's hear from one of our sponsors, Wash Station.
Wash Station proudly sponsor this episode of Housed. We provide best-in-class laundry solutions that complement your buildings. Wash Station. Smart, green, clean.
Wash Station are the go-to supplier of laundry solutions in the shared living sector. So we're delighted they are sponsoring House once again for season 6. Thank you so much. Now, the next prediction that we had is slightly difficult and tricky because of the stats. So I will, basically we were discussing the troubles in higher education and the impact on accommodation. So we explored how pressures on universities, redundancies, finances, falling student numbers might affect demand for PBSA co-living and BTR. We were quite bullish with those predictions, and we did call out continued restructures and redundancies. And we even said it's not if, it's when, on a failure or a forced merger from a university. So we were absolutely right about the sector-wide financial stress and job cuts. You only have to do a search on the internet to find out how many universities, if not all of them, had redundancies and culled some of the courses as well. The regulators' warnings about widespread deficits became mainstream, with 40% of universities running deficits. And there's obviously more public discussions about mergers increasing. And towards the end of 2025, we did see that big merger between Kent and Greenwich. So I think that, mitigated a closure. So if they hadn't had merged, we probably would have been right with our bullish assumption. But actually, the merger was, promoted as a positive move, and created, obviously there were job losses, but it's created more opportunities in that part of England, and consolidated all of their efforts into merging those two universities. So yeah, Dan, you were always pretty grim about universities for the whole of 2025. So it was justified, I guess.
It was, and actually, even today, very early January, we're already seeing the deficits being reported by by big universities, Russell Group universities as well. Some of them doubling in deficits. It is not looking good out there for many universities. We don't have that collapse moment that we thought potentially could happen in 2025, where a university sort of goes to the wall, files for bankruptcy, or at least is rescued by the government, or whatever might happen in that scenario. But yeah, I know what you mean, Sarah. I don't know how much the merger between University of Kent and University of Greenwich is sort of real long-term strategy planning and really focused on that sustainability, and how much it's more of a survival tactic, I would say. And I'm not, neither of us are suggesting that this was an enforced merger, that the government got involved in any way, shape or form. But neither of those universities, really have the healthiest of finances, should we just say. So I think there's probably going to be a lot more of those coming up over the course of the next couple of years, I would say. There's only so long that these deficits can continue to go on before, some of the covenants start to be breached on certain loans, and that, universities really do start to struggle. So I think what we will probably see is the rise of the super group. So groups of universities, probably in, similar locations, starting to merge, starting to then cut courses, cut costs, cut staff, and having spoken to people at both of those universities in Greenwich and Kent, obviously there's a lot of redundancies. There's of course typically post-merger in any way, shape or form, there's normally some kind of voluntary redundancy scheme, but then it will move on to forced redundancies. And I think that's something that we just need to be cautious of there and careful about how we talk about it as well, because it's really unsettling for anyone in the higher education sector at the moment. Having done one of the Cubo keynote speeches last year in 2025, I can see the morale is not great. And that is very understandable across the board, because they're under so much pressure. And whether they're accommodation officers or, in the support services, or in catering or events or whatever it might be, there is a huge amount of strain and pressure on jobs at the moment. And so, I think 2026 will probably bring about more of the same. I think there'll be not necessarily, a it won't necessarily precipitate a waterfall of mergers, but I do think there will be more mergers. There will be more groups created to oversee certain universities and probably create more specialists. And so universities will, in my opinion, start to become much more specialised again. You're seeing some universities cutting courses already. So part of that will be down to universities thinking about graduate outcomes, as well as the fact that the courses are loss-making as well. So it's going to be an interesting, turbulent time. I'm just a bit concerned as to how we talk about the sector, and therefore how we talk about the fundamentals of PBSA beyond that as well. If we can't talk about a healthy higher education sector, how do we talk about a healthy PBSA sector?
I think the other thing about kind of, I guess, how we talk about it is how the sector is being perceived by students, because we know how much research goes into, finding a course and finding a university and finding a city for students. All of this talk about courses being cut, about redundancies, that's surely going to be impacting students' decisions to be going to university, and that's before you even throw in the affordability angle, which we know is, has a huge major impact as well. So I think there's a big kind of PR crisis really with higher education, whether that be internal regarding staff and support staff, or whether it be from a student and parent point of view. We discussed, I think it was at the end of 2025, about kind of the East Midlands and how the universities there, none of the major universities are going to be providing modern languages courses. So then you kind of start to be thinking, well, if you're going to be studying modern languages, across the country in other cities, is there a risk that those courses won't be going ahead? So that I think we need to keep a really, really firm eye on what's going on in higher education. As you said, Dan, that definitely will impact student accommodation numbers as well.
I think we said last year that it's a broken system, similar to planning, and it needs a complete rethink. It's it's designed for a different world, and that is still where we are, really, I think. And obviously, the change in the fee structure is not going to make the improvements that is needed to the funding. And it's, again, one of those things that needs a big overhaul and a fix. And we're not seeing that happen, I guess.
No, I mean, over Christmas, my stepdaughter Bethany was home, and we're starting to look ahead as what the rest of her academic year is going to look like, and it just seems ridiculous that she's pretty much going to be home over the summer for 4 months. And you've got, they've got to start thinking about those condensed 2-year courses. Yes, she needs a break. Yes, her course is intense, but having 4 months off over the summer, she'll need to work, just to fill time as well as make money. So yeah, it's an outdated system.
Yeah, look, I go back to that line that I've just said. How do we talk about a healthy PBSA sector when we can't talk about a healthy higher education sector? Not that should be the tagline for the podcast or anything like that, but it brings me back to the Urban Living News webinar that I did just before. It was the last thing that I did before Christmas to sort of sign off, and it was effectively a webinar about ultimately putting a positive spin on the PBSA sector. And I've been accused of being bearish throughout the course of this year, when all we were doing, all I've been doing, is calling out that it's tougher to fill beds and the operating costs are sliding the wrong way, and those returns aren't necessarily there for anyone looking for a short-term flip. And the long-term capital, yes, they are still there. They're very consistent, but the rent increases weren't there. So, we knew that. And I probably second-guessed myself on this webinar, and was talking about, strong fundamentals long-term for PBSA. And I stand by that to a certain extent, but with probably too many caveats to have covered on, the 5 minutes or so that I actually got on that webinar, because it isn't as easy to fill beds right now. And what is that going to look like when, universities actually do start to struggle even further? There are more mergers, the direction of travel is not looking particularly good there. We've got some good trends for international students for undergrads at the moment, which is great. but the common issue is still going to be affordability. So I think my concern with higher education is that it's not helping PBSA. It really isn't. University halls can't fill beds, but universities are struggling to fill places. A lot of them, even some of the Russell Group as well, and they are able to balance the books. The sector is certainly not healthy, and I just don't think that's going to help PBSA in any way, shape or form in 2026. So there's certainly a prediction there coming up from me.
Let's come back to affordability for our next prediction after we hear from our brand new sponsor, Howden. Howden is the 5th largest employee-owned business in the UK and one of the largest insurance groups globally. With over 60 years' experience, Howden's specialist education division delivers tailored insurance, risk management and wellbeing solutions for the education sector.
They're the trusted partner of nearly 1,000 schools, colleges, universities and student accommodation providers across the UK.
Howden helps owners and operators protect what matters most, and so they are the perfect sponsors for Housed. Thank you for coming on board for season 6.
Now, Dan just hinted at affordability. That was our next prediction. We obviously debated at the beginning of 2025, as we did throughout the whole of 2025, whether there would be any shifts in affordability for the shared living sectors. We predicted that affordability wouldn't improve in 2025. We predicted modest growth and possible discounting later, which obviously was bang on. There was obviously modest growth in certain markets, and we did still see those big discounts later on in the season for PBSA, and generally across the wider, rental sector, there was modest growth across the board, and there were some big drops in certain cities as well. So yeah, what's our thoughts on that? Were we pretty much right about modest growth? Or if we take into account all of the discounts, all of the incentives, etc., was it actually a deficit, not a growth at all?
I think we were right that affordability is not going to be shifted or changed in the year, and I think that's still the case. And I think based on the things we've already discussed in this episode, I think we're still going to struggle with that this year, and it is an ongoing problem. But we're still, this is where I continually get frustrated, we're still doing the same things we've always done year after year after year, and the world is totally different. The worlds that we're working in is totally different, and until we really grasp that and go, right, okay, let's make change, I don't think we're going to see the needle move on this very much, and only in a negative way, because people are forced to do it because they're forced to discount, or they're forced to throw loads of incentives back because they can't get the occupancy they need.
So I copped a lot of flack last year for saying that I just didn't think double-digit rent rises were appropriate in any way, shape or form, unless you've had a massive capex project or you've mobilised at 100% occupancy with rental discounts, having built a really nice product in a good location. But it was all borne out. Like we haven't seen those double-digit rent growths. We saw that. We tracked it through Unite. That was the great thing about all the Unite reports. We could track the occupancy. We also then called the fact that Unite weren't going to hit occupancy or revenue targets towards the end of the year. And you're right, there were massive discounts and cashbacks on offer, biggest I've ever seen. There was £5,300 off of one room in Leeds. But that was just endemic across the board. And we're now, unfortunately, in that race to the bottom of cashbacks, which have totally distorted the markets. And I blame every operator out there and every investor out there. This isn't just isolated to one or two operators. Pretty much every operator has got cashbacks in some way, shape or form. And it's not, the third parties are beholden to the investors. And the investors quite often have, refis or those initial rental prices need to be high for the valuation. So I think what we're starting to see is that, and what we saw last year is that students are just going to wait and wait and wait. And all the marketplaces are saying exactly that students realise they don't have to book early. And so all the good work that we did post-COVID has just been completely undone because we're still focusing very much on those cashbacks. And the right answer here is to drop your rents and make them more appropriate. And then you will be able to front load the booking cycle. Because if you just have those offers on later in the market, everybody waits in every city, and it just distorts the demand until, it's too late to do anything about it. But we see operators with, an entire page of what cashbacks have we got. Just literally search for a brand, an operating brand, and cashbacks, and you'll find effectively a list of all of the cashbacks that are available. And that's not going to help anyone. And there are some big operators out there doing that straight off the bat, launching with massive cashbacks. And, I think anything over £250 as a cashback, because, you can use a cashback in a competitive market, but anything over £250 shows that you've got your pricing wrong. So if you are offering more than £250 cashback, you have your pricing wrong. It is absolutely that simple. And it's just not doing anyone any favours. No operator likes doing it. So, I'm not complaining about operators. I've done cashbacks before. I've got clients who have got cashbacks on, and, for good reason, justifiable reason, because of refis or whatever it might be. But it is just a measure of the fact that the market has changed. The asset is potentially being stranded, and the pricing is definitely wrong. So, I'd love to say this is the year of killing the cashback or cancelling the cashback, but I can categorically tell you it is going to be an absolute bun fight at the end of the year, because everybody has not done enough on their pricing to start low and then potentially dynamically price and move that higher or move through the tiers. But we're all just going to be stuck in this bun fight of, massive cashbacks in some locations where you wouldn't necessarily expect them as well. I don't think anywhere is going to be immune to a cashback bun fight in July and August. It's going to be a case of who goes sooner rather than later with the big sort of £1,000 cashbacks. I think that's one of the key things to watch.
I think the only indication that I guess anything was learned last year is from our point of view at the Property Marketing Strategists, we have been engaged with doing marketing audits and marketing strategies at the end of 2025, where in previous years we've been called upon to do that in kind of June, July, which is obviously far too late to make an impact. So it felt like some operators were acting quickly to get their ducks in a row from a marketing perspective, but obviously you have to spend more and market harder if your prices aren't aligned with the local market and the local demand. So it's all one cycle. We're product marketeers, and we certainly cover that in it. But I would say it was slightly refreshing to be having those conversations much, much earlier. But watch this space for our 2026 predictions next week. The last prediction that we had was about international students. We were concerned that Chinese demand would be stressed and there would be Indian affordability constraints. So our advice this time last year was to focus on rebookers and don't rely on big late cycle international surges. Now, hey, we were totally right about that. Everyone did wait, and those international, surges certainly didn't come. The data did show weakening Chinese volumes. The study visas were down. And Home Office data indicates a decline for both Indian and Chinese student visas as well. So, how accurate were we?
Not bad. It's a lot of this is down to postgrads. So Chinese numbers dipped because of postgrads. Undergrads actually look all right. But the major issue that we have leaks into affordability here, because even the Chinese are on a sliding scale of affordability. And where we see that we're only filling within PBSA, we're only filling the premium end of the development funnel and the development pipeline. Then you have too much premium stock. Then they realise they need to be competitive. And then that starts to slide their prices down, which means the middle gets squeezed. And then their prices have to slide into the more affordable sector. And then their prices have to slide. And everyone then, pushes students down and down and down. More students potentially then end up in HMO, or they search for flexibility and affordability in BTR and co-living. And that's one of the things that we know is happening. Obviously, international students in particular are looking elsewhere. This is not just a case of PBSA is the only choice, far from it now. And I think, we need to make sure that, the PBSA sector in particular just needs to make sure that they are not overly reliant on one specific demographic. I think if you have more than 50% of students from one demographic in your property, then you are in for a bit of a rude awakening at some point. And that will be Chinese students, effectively. Like, that will be the international cohort that is normally the highest in certain places. It then really concerns me as to how those international students have been acquired. And it's normally, when it comes to China, through marketplaces. There's some great marketplaces out there that will fill your beds. But I'm hearing from the vast majority of operators that I speak to that there is a bit of a campaign from certain marketplaces to really drive commission and to try and drive exclusivity. And we are entering a world where, we're going to end up with booking.com here. And if you ask any hotel 25 years ago, can you see yourself giving away 20% of your revenue to a website, effectively, and a service that fills your beds, but does it on a nightly basis? If you now say that that's what's going to happen, and I know that there's a lot of people paying 20 to 25% in certain cases, if you think that's going to be the norm for PBSA or BTR or co-living, we have a major problem. So I think everyone needs to just take a bit of a breath when it comes to marketplaces as well. So you don't want to be overly reliant on one nationality. You don't want to be overly reliant on one marketplace, in my humble opinion. Don't get me wrong, there's plenty of very good operators out there that have an exclusivity policy with one marketplace in particular. And that may work for them in terms of the team sizes or just the, where they're positioned. But my worry is that, just focusing on that one marketplace and that one demographic, I think that leaves you at a great risk of revenue leakage, but also occupancy leakage if, for whatever reason, that property or that brand falls out of favour. So overall, and that's actually slightly a prediction as well, but overall, I think we were pretty much bang on with what we were expecting. The demand is very volatile right now. Postgrads are a bit of a disaster zone, and I don't see that changing anytime soon. And that's going to really heavily affect PBSA as a whole. So that gap with postgrads is very difficult to fill with the kind of money that postgrads have when you're trying to attract domestic students to fill that gap. It just can't happen. And that's where this revenue leakage and the affordability sliding scale is really coming into play. And that is only going to be stronger in 2026, in my opinion.
I think this comes down to my earlier point. We were right, but again, we're not quick enough to look at the sector as a whole and think about what we need to do to make changes to how we market, how we promote, what we build, how we build. And it's changed, it's changing, and we need to change wholesale what we do as business. And yeah, we'll wait till next week to see whether we predict whether that's going to happen.
And also, in a few weeks' time, we're going to be having a China special with Tong and Beaver City as well. So expect lots of deep dives into the market with the absolute industry experts there. So we cannot wait for that one. So to summarise, we were right about uncertainty, bottlenecks and affordability. And if 2025 taught us anything, it's that change is coming and change is happening, but rarely on the timeline anybody hopes for. And if you're operating in shared living, flexibility and value are still the watchwords. Next week, we'll go through some predictions for 2026. So let us know if you've got any thoughts, hopes, ideas for the next 12 months that you'd like us to cover. Thank you to my student halls for being our headline sponsor for the season once again. Your support is hugely appreciated. And of course, thank you to Utopia and Wash Station for coming on board again for season 6. And our newest sponsor, Howden, thank you so much for coming on board. We can't wait to continue to partner with you for the remainder of the house season. We hope you have enjoyed listening to this episode as much as we've enjoyed recording it. I know that I've missed catching up on the shared living news, so I'm sure it'll be coming thick and fast. But if you have any hot topics or ideas of what you want us to cover in season 6, from the PBSA, BTR, co-living, later living, HMO and university accommodation sectors, get in touch at hello@housepodcast.com, and we'll see you again next week.